So welcome everyone. This week, we're going to cover the end of chapter 3. So last week's time together, we really went over the accrual basis of accounting and the necessary adjusting entries we need to make in order to have our books meet up with what's really occurred. And so we spent some time talking about some of the adjusting entries that may be needed to make in order for internally what's gone on to match the true accounting of the during the period of the company. And so we talked about some various transactions that may need to be adjusted, such as the when we've taken out a loan or we've received money, the interest revenue that's accrued, or the interest expense if we have borrowed money. So we've talked about that. And then from there, we've talked about accruing revenues that maybe we have not billed for, but we've completed, accruing expenses. And again, this whole purpose is to just make sure that we clearly report the revenues that we've earned in the period that we've earned them, not necessarily in the period we received the cash. And we record the expenses, those costs, in the same period that help produce the revenues. So we went through all these different items. We talked about depreciation. We talked about all the various journal entries. And so you had homework. Your quiz was all related to this first portion of chapter 3. We got to where we then prepared what we call an adjusted trial balance. And we know that adjusted trial balance is really a list of all the debits and all the credits after we've made those adjustments. You know, we always start with the most liquid assets, cash and accounts receivable and supplies, and then we move on to the more long-term assets. Then from there, we do our liabilities, our common stock, stockholders' equity section, and then we end it with what we will call the temporary accounts, the revenue and expense accounts. So as you see right here, we have a list of all our debits and all our credits, and the totals, the debits will always equal the credits. The truth is, once we get this adjusted trial balance, guys, we then can prepare financial statements. This is the easy part. We're going to prepare those financial statements. Remember, our whole purpose of accounting is to measure transactions and then to communicate them with the end user. Well, we measure these transactions by taking all these external transactions and deciding what accounts have been affected. And then we prepare a journal entry. And then we go through all the work to where we perform the trial balances. Now we're taking that adjusted trial balance and preparing financial statements. This portion is the communication of the transactions to the end user. So we will take the financial statements and prepare them based on the adjusted trial balance. The very first financial statement we will prepare will always be the income statement. You see on the adjusted trial balance where this information is located. It's located at the bottom of the adjusted trial balance. We take all revenues and all expenses, and we transfer that information over to an income statement. Do you see how that works? Also, notice here that the net income that's derived from the income statement will be transferred to the stockholders' equity section or statement of stockholders' equity or owner's equity. So the financial statements flow one into the other. We're going to talk about that. So the first thing we'll do is we will prepare our adjusted trial balance, and you will see there are several sections where we would have the revenues, and we will show the section where there's stockholders' equity. And then there will be the balance sheet. Okay. So you see in blue, those are the items for the income statement, or the accounts for the income statement, revenues and expenses. Then there will be the statement of stockholders' equity, which is in red. And then the balance sheet, which is in green. So make sure you're aware of this when we go to prepare those financial statements. The income statement, again, contains the revenues and the expenses. You would put your revenues first, and then you would adjust with your expenses. The statement of stockholders' equity will take the net income that was derived on the income statement and flow it in to the statement of stockholders' equity. Also, it will take the dividends from the adjusted trial balance along with the balances of the common stock. The balance sheet takes the information from the adjusted trial balance and also the information from the statement of stockholders' equity. Excuse me. And the statement from stockholders' equity is exactly what will apply or be filled in this stockholders' equity section of the balance sheet. Also, the statement of cash flows is another financial statement that basically shows activities, or it separates the activities involving cash receipts and cash payments. And it breaks them into three types of activities: operating, investing, and financing activities. So guys, here's our first question of the day. Which financial statement would include a line for net income? Anyone want to call it out? What do you think? We know net income has a line for under the income statement. And we also know the statement of stockholders' equity has a line for net income. Look back here, guys. Let me find it. Here, our net income has a line for net income. And our statement of stockholders' equity right here has a line for net income. So both, both the income statement and the statement of stockholders' equity have lines for net income. Now, the key is to prepare these financial statements, which we're going to go into detail. Then, once these financial statements have been prepared, we need to close out our book so we can start fresh again the next period. The closing process includes taking our temporary accounts. Now, temporary accounts are those accounts that are utilized in one period only. We don't say our revenues and expenses since the start of the company is this amount. We say our revenues and expenses for the year contain this amount. Okay. So those temporary accounts, such as revenues and expenses and another dividend, we are going to zero out and put them into a bucket that ultimately flow into retained earnings. So we can start fresh the next period. So to transfer the balances of all these temporary accounts to the balance of retained earnings, which ultimately zeroes those out so we can start again. So what we do first is we take our service revenue that normally has a credit balance. So to zero it, we debit it and we flow it into retained earnings. We also then take all of our expenses, which normally have a debit balance, but we credit them and flow those into retained earnings. So ultimately, guys, think about it. Just these two transactions are our net income. And we know our statement of stockholders' equity adds our net income to retained earnings. What is net income? It's all your revenues less all your expenses. So we're zeroing these out so we can begin fresh. The other thing that we zero out is our dividends, will be our dividends. We keep track of the dividends that we've paid out each year. At the end of each year, we zero that out into retained earnings and start fresh. Remember, in your statement of stockholders' equity, you have a line item for net income, and you also have a line item for dividends for the period. These are all getting zeroed out to start new the next period. So if we're crediting our revenues into retained earnings because we're zeroing out the revenue accounts, if we're debiting our expenses and our dividends into retained earnings, we end up with the correct amount into our statement of stockholders' equity, where we show our net income and we also show our dividends. Students sometimes think that closing entries are meant to reduce the balance of retained earnings to zero. No. Retained earnings is a permanent account because it shows all the revenues and all the expenses and dividends over the life of the company. It's being accumulated. We don't bring the retained earnings to zero. Okay. So what we're doing in this I think I want to do a financial statement. That's not what I wanted to do. No, that's not what I want to do either. My goodness. All right, so we're going to go and we're going to do a financial statement through the homework. How about that? Okay. Can you guys still see my slide, my screen? I hope so. Okay. Okay, week 3, homework week 2. Here we go. So let's look. Here we show Persimmon Designs provides consulting services related to home decorations. Persimmon Designs provides customers with recommendations for a full range of home decor, including window treatments, carpet and wood flooring, paint colors, furniture, and much more. Below is the year-end adjusted trial balance. So we know it is in this adjusted trial balance where we will prepare our financial statements. So the first thing we're going to do is prepare an income statement. So what we'll do is we start where it says revenues and we show all the revenues and all the expenses. So I want you guys to open up your homework, your McGraw-Hill, and I want you to input this income statement. And then I'd like you to tell me the net income that you show on your financial statement. I'm going to give you a couple minutes to do this, and then we'll go over it together. Okay? I am just going to hit pause recording. Just remind me to start it again. Okay, so it sounds like this problem was varied among everyone. So on mine, the service revenue is 112.4. That's the only revenue I see here. So I will put that service revenue of 112.4 here. $112,400. Then the expenses, I will just start with the salaries expense, rent, depreciation and supplies. Salaries, rent, depreciation and supplies. Now, guys, remember, you will always have the word expense after every expense. So if it doesn't say expense, it's not an expense. It doesn't belong in the income statement. Okay. Then don't forget the net income, which will be the difference. So we're talking 40, 800. Now I can check my work and make sure it is correct. Okay. Got it? So I have 4,800 then that I'm going to flow into the statement of stockholders' equity. So don't forget, add net income. That 4,800 will go into the retained earnings section. The dividends are going to be a subtraction from retained earnings. Okay. So it tells us our balances, our common stock was 58,000. Our retained earnings is 15,800. Common stock, 58. Confirm that I was right there, 58, 15,8. And dividends. Did we have any dividends? No. But they issued an additional common stock of 12,000 for the year. So we need to show issuance of common stock 12. So we have our balance here, 70. Our balance of retained earnings should be 20,600. So 8,373, 800, 12,000. Let's make sure I didn't have an error there. And oh my gosh, 58,000. What am I doing wrong here? Oh, I know what I did wrong. The 58,000 is the ending balance because they're letting us know they issued 12,000 in common stock for the year. So instead of this being 58,000, this is going to be 46,000. Make sense? Because what is shown on the adjusted trial balance includes that stock that was added. 61.8, right? 78.6. Hopefully, the third time's a charm. So as you see here, when you look at this 58,000 in common stock, that is the ending balance because they're giving us information that shows during the year the company issued an additional common stock of 12,000. So this will be our ending balance, and we'll have to plug in our beginning balance. Okay, that makes sense. So this entire statement of stockholders' equity will flow over to the balance sheet in the statement of stockholders' equity section. Okay, make sense? Does anyone have any questions on that before we move on? The balance sheet is very similar in that you will plug your information. So when you have all your adjusted trial balance, your assets and liabilities will be taken from here. The section of stockholders' equity will be derived from that statement we just completed to have the balance sheet set perfectly. Okay? So now what we're going to do is we're going to be aware that we're going to prepare these closing entries where we zero out our temporary accounts. We zero out our revenues, we zero out our expenses and our dividends. After we create journal entries that zero those out, we will then prepare what's called a post-closing trial balance. Now, this post-closing trial balance will basically be a balance of every permanent account because all the temporary accounts have been deleted. They're zeros. So you see here, the post-closing trial balance is identical to the balance sheet. It's got the common stock and the retained earnings. Everything, all the revenues, the expenses, and the dividends have flowed into retained earnings. So now all of these permanent accounts are what you will see on the balance sheet. Which of the following accounts would you find on a post-closing trial balance? What do you guys think? Anyone? One of those is correct. Yeah, Anne said B, correct. You will see retained earnings on a post-closing trial balance. The reason you're not going to see dividends, rent, or service revenue is because those are all temporary accounts, and the only thing that's on a post-closing trial balance are permanent accounts. Okay. So this exercise here asks us to prepare the closing entries and then to calculate the ending balance of retained earnings. So we are going to close out the revenue accounts. We're going to close out the expense accounts and the dividend account. So what we'll first do, since revenues have a normal credit balance, we will debit our service revenue and interest revenue. As you see here, we'll debit it to zero it, and we transfer that income into retained earnings. So we debit the revenues and we credit retained earnings. That closes out the revenue accounts. Next, with the expenses, they have a normal debit balance. So we're going to credit those to zero amount and debit that to retained earnings, as you see here. Then our dividends have a normal debit balance. We're going to credit that to zero out the dividends and debit that into retained earnings. Does that make sense? Okay. Now, the T account for retained earnings, it began with 30,000. We closed out the revenues of 56. We closed out the expenses of 40,000, and then we closed out the dividends of 3. So our new balance sitting in retained earnings is 43,000. Okay. Now I'm going to let you do this one. The following information here shows an adjusted trial balance. Calculate the ending balance of retained earnings. So we know the beginning balance of retained earnings is, oh, I screwed this one up. Ignore that 3,000 here, guys. The beginning balance of retained earnings is 9,000. Ignore this. Okay. And now what you're supposed to do is calculate the ending balance of retained earnings. I'm going to give you a minute to attempt this, which that means is you need to close out your revenues, you need to close out your expenses, and you need to close out your dividends. Okay, guys. So in this scenario, no, we're going to close out our revenue account of 54,000. So when we close out a revenue, we would debit our revenue, we would credit retained earnings for 54,000. To close out our expenses, we credit our expense accounts, but we debit the retained earnings. And to close out dividends, we credit the dividends, which means we debit the retained earnings. So here you see the beginning balance, and then you see posting the revenues of 54,000, posting the expenses of 51,000, posting the dividends of 4,000 to come up with an ending balance. Then you see we've got our post-closing trial balance, just all the permanent accounts. We don't have any temporary accounts. Okay. So this goes through the whole process, which you guys can look at these, but the key here, let me go back to your homework. The key here is making sure you prepare financial statements from that adjusted trial balance. You know, you can grab the income statement information with the revenues and expenses. Then you'll use that net income to flow to your statement of stockholders' equity, along with your common stock, retained earnings, dividends, and any other information they provide. Then to prepare the balance sheet, you'll use the information you received from your statement of stockholders' equity for the statement of stockholders' equity section. And then your assets and liabilities will be taken from this adjusted trial balance. Does anyone have any questions? I know I split this into 2 chapters, and this, or excuse me, 2 weeks, and this week is really light, but to have added this on to last week, I think would have been a little too difficult, which is why I did that. How are you doing? Any questions? Anyone? Can you type in chat and say we're good, or I need more help? I don't know if I can't hear you. No questions. I've got none. Okay. Well, guys, you know the plan this week. You'll work on your have the review done by Thursday night, homework and quiz done by Monday night. Okay? Have a great day, everybody. Take care.